Backtesting is the process of testing a strategy against historical market data in order to evaluate its performance. This provides a relatively accurate overview of its past results and allows us to finely tune the strategy before risking capital in live markets. To begin backtesting, we'll load up our backtesting template. We'll then make a copy and we'll name it after the strategy we'll be backtesting. So if we say 35 bounce, we load our new spreadsheet, and if we go across to settings, we can actually customize the name here. Whatever you type in here will come up in the title, so it's very easy to see which strategy you're on at all times. Pairs is where I list out the items I'll be trading. At the moment, I've listed out a whole lot of different currencies, but you may want to list out stocks or crypto or just a couple of currencies if you're going to be trading only those. The reason I put them in a list on the settings page is to avoid typos when I'm actually entering them in the backtesting template. So if we go back to data input and we see pair, we have a drop down here. When I click that drop down, you can see everything within those two columns. So if we're to be testing the New Zealand dollar US dollar, I can start typing NZDU, and then if I just hit enter, it's actually going to fill that in. So it's nice and quick, and it also stops me from doing things like NXD USD as a typo, and it'll say, hey, actually, that's not something in your list. Are you sure you want to enter that? If I'm trying to grab all of the data from one specific currency, but I have a typo where it's NXD USD, that's going to affect the outcome of my results. So this is just another little safety measure. If you'd prefer not to have this, you can go to Data, Data Validation, select the whole thing, B7 to B, and click Remove Validation. Now I can type in anything I would like. I'll undo it because I like to have it on. MISC isn't something we need to worry about right now, and that's actually going to be prioritized on the live trading template. So I can remove that, and any additional items you want to put in the dropdown, you can list in here. Entry reasons isn't something we're going to be focusing on right now, but we'll come back to that in the more advanced versions of backtesting. Let's go back to data input and let's begin our backtesting. Our 35 bounce strategy backtesting template is all set up. We've now put in 4 hours on our time frame. So while the sheet looks quite overwhelming, we're just going to concentrate on these 5 columns first. Everything else around it will start making sense as we fill the information in. Backtesting, being the process of testing this over historical data, means I don't have to wait in real time for any of these trading opportunities to come up and then log them and then wait several years to see if it's actually going to be a worthwhile strategy. I can use historical data and review it like it's happening in real time, log my trades, and then see what I can do to optimize it. So in order to backtest, seeing as I was looking at the start of 2018 to begin this strategy, I'm going to go back to 2018, replay the market, and enter our trades in here. Let's jump over to TradingView, and here we are on the New Zealand dollar US dollar 4-hour chart. I'm going to click this button down here again, the calendar with the arrow, and I'm going to go back to 2018 0101 and then zoom in a little bit more so we can see our candles at the start of 2018. So while backtesting, I don't want to see what's coming up ahead, as it may influence whether I log something as a valid trade or not, and I'll have a bias towards a winning trade. So to keep me in the dark, I'm going to use Market Replay. If we click Replay, we get this vertical blue line, and I'm going to go back to 2018 0101 and click on it there. This rewinds the market to the start of 2018, so if I woke up on January 1st and I checked the charts, this is exactly what I'd see. I have no idea what's coming up ahead. It could be a massive red candle, it could be a massive green candle, or it could be just moving along sideways for a while. In this view, I have no idea. Bar replay or market replay is very handy for backtesting because it helps us not put any bias into the trades we're logging. Seeing as the strategy is very new to us, we need to refer back to our strategy outline to make sure that all of the trades we're going to be entering match up with our trade setup and our entry steps. So if we go to our strategy outline, we see we're on the 4-hour time frame for our 35 bounce. Status is concept. I'm going to change that to testing since we're about to start testing it. We need to confirm that we have our 35 EMA, our 12 RSI, and our 12 ATR. We have our 35 EMA, our 12 RSI, and our 12 ATR. We are good to go on them. So now we've got to look for our trade setup. We have 5 points in here. First point being price action pulls back to the 35 EMA and touches the 35 EMA. So we are in a market that looks to be in an uptrend. It's making higher highs and higher lows, and it's sitting above our 35 EMA. So in order to progress this along, in order to find our first trade, we're going to use either the play button or the forward button here. We can adjust the speed of our playback. So if we hit play, it'll give us one candle at the moment every 5 seconds. If we update that to be every 1 second, here we are. We can see the market is moving forward much faster than real time, but is giving us the same experience. We don't know what's coming up next, and we've actually just had our first cross of the 35 EMA. So that's point 1 of our trade setup. Price action pulls back to the 35 EMA and touches the 35 EMA. That's our touch right there. So let's move on to trade setup number 2. EMA touch must be within the pattern of 2 counter trend candles followed by 1 trend candle. So seeing as we're in an uptrend, our counter trend candles will be red candles and our trend candles will be green. If we were in a downtrend, our counter trend candles would be ones moving upward, which would be our green candles, and our trend candles would be red. Going back to this, we are in the uptrend, so we are looking for 2 red candles like this, followed by a green candle. This does not have that candlestick pattern. It's green, red, green with the cross. So point 2 has not been met, so we cannot continue with this as a valid trade setup. As such, we won't log anything and we just move on in the market. I'm going to use the button just to click forward to watch what's happening. And here we have another potential setup happening. We have a cross of the 35. So if we once again review the first point, price action pulls back to the 35 EMA and touches the 35 EMA. It has touched the 35 EMA and it looks like it's just bounced back, so the body's just closed above it. So if we move on to our next candle as well, we get a big green candle following that. So we can move on to point 2. EMA touch must be within the pattern of 2 counter trend candles followed by 1 trend candle. There are our 2 counter trend candles and our 1 trend candle, which has the cross in there, so that is actually valid. Point 3, candles 2 and or 3 must touch or cross the 35 EMA. The body or the wick is fine. So here, if we look at this setup, that's been candle 1 here, candle 2, and candle 3. Candles 2 and 3 must interact with the 35 EMA. 2 or 3, or 2 and 3. So here we can see both of them are interacting. So our third point has been met. Prior to candle 2, which is this one in the middle here, there must be at least 1 candle that doesn't touch the EMA. So looking back, that could be candle 1 or any of the ones prior. We have 4 candles here which don't touch. So that is a valid setup as well. And point number 5, candle 3 must not close on the opposite side of the 35 EMA. So opposite side would be below the 35 EMA. And while our second candle can close below there, this third candle needs to close because we're on an uptrend and we're looking for long trades, as in trades where we expect the market to go higher. This must close above the 35 EMA, which it has done. So all of those points are valid. That means this is going to be a valid trade setup. Now is the point where we start looking at entry steps. Our entry steps to enter the trade. So entry confirmation, we just want to confirm that we're good to go. So candlestick pattern of 2 counter trend, 1 trend, candles 2 and or 3 touch or cross the EMA. So we have our 2 counter trend, 1 trend, candles 2 and or 3 cross, perfect. Let's move on to entry step 2. Enter trade after the close price of the third candle, which is also the open of the new candle. So I'm going to get my trade tools here. If we click this here, we can see long position and short position. Seeing as I've got them favorited, they're in my hovering window up here too. And because we're in an uptrend, I'm going to put in a long position. Now I have the magnet symbol on here. That means my cursor is going to snap to certain points on the candle. So I quite like this because it's going to make it exact. If I move around here, you can see the line stays constant. So anywhere I click around here, it's going to put it right on the close of that candle. To log the correct time of the trade, this here, if we hover over it, you can see at the bottom says January 3rd at 6 p.m. 6 p.m. was the open of this candle, and that's actually the one that confirmed our setup. In order to get the correct time, which in this case would be the next bar along, 10 p.m., we will select this trade tool, and if we press the right arrow, it's going to move a long one. Perfect. So now we can see January 3rd at 10 p.m. is going to be our trade open. So I'm going to go to my backtesting template, and I'm going to say my pair is NZ dollar US dollar. It is January 3rd, 2018. I'm using the US date format, which is month, day, then year, and you may want to update that. So I'll show you how to do that in this sheet and in TradingView. Our time for this trade was going to be 10 p.m. So if I type in 22, it comes up with 10 p.m. here. And that is our first part of backtesting. We've logged the currency, the date, and the time. Next, we're going to put in our trade parameters. For this, we're going to go to our entry steps because this will vary per strategy once again. Entry step number 3, set stop loss 1 ATR below the swing of the second or third candle. ATR is taken from the third candle. So I'm going to find the swing low as in the lowest point of these two candles, which would be the second candle here, has a big long wick down here, which says it's 31.9. So we set the stop loss to the swing low plus 1 ATR. Now the ATR is our average true range, and I'm going to take it from the most recent candle. We could choose to take it from the swing low, which would be the previous candle. For this one, I like to keep it on the most recent candle because that's the most up-to-date value on what we're trading on. So we can see our ATR here is 209. If we double click on this and we have 319 here, that means we're going to have 528 as our total. Okay, and if we update that, you can see our stop loss is now down here. So we've taken the swing low and we've added 1 ATR below it in order to give it enough room in case there's a bit of push and pull with the candles before actually continuing this uptrend. So in order to figure out our ratio, as in how much we're looking to make off this trade versus how much we're going to be risking, we need to look again at our entry steps. So entry step number 4, set target at 1-to-1 and update after optimizing. So I'll start with setting the target as the same thing. Once again, I double click on there and I get 528 in here. And that's going to be what our first trade will look like. We have a reward to risk ratio of 1, which means we are aiming to make exactly the same amount as we are willing to risk. So if we were risking $10 on this trade, if it worked out in our favor, we would win $10. Back to 1-to-1. And we can enter that value in our stop loss here, 52.8 pips. Now, while it says 528 in there, that's in ticks, and we talk in pips, which is 1/10 of that. So you can see down here, it says 52.8. So we are taking that figure, 52.8, and it'll automatically say loss until we've actually filled in our maximum win. Now, what separates this apart is instead of just putting in whether we win or lose the trade, we're going to see exactly how much we could get out of this trade. That's when a whole lot of calculations in the background are actually going to look over it and say, hey, it would be most beneficial for you to trade this at a 1.4-to-1 or a 2-to-1 or maybe even a 4-to-1. Who knows? We'll find out once we've done some back testing. So we don't need to enter anything in max win just yet. We need to watch how this trade plays out. So once again, we can step forward one by one, and we can see at 1-to-1, this trade has been marked as a winner. This arrow up here shows where the trade went and where it actually closed, which is on the 4th candle later. So sometime between 10 a.m. and 2 p.m. on January the 4th, this trade would have closed as a winning trade. We're going to continue on with this, and just to see how far it can go. If the candles are moving off your screen, down here you have a button called Auto. If we click on that, it's going to scale the candles so they're always in our screen so we can always see them. So we continue on. We're going to look for another trade setup, and we've actually just had one here. Going to reverse that one candle so we're not getting a preview of what's happening. So once again, we're going to need to check over our strategy outline. We have our trade setup. Price action pulls back to the 35 EMA. Check, it has done that. the EMA touch must be within a pattern of 2 counter trend candles followed by 1 trend candle. So 2 counter trend candles, 1 trend candle. Check. Trade setup point 3. Candles 2 and or 3 must cross the 35 EMA, either the body or the wick. This is candle 3 which is crossed, so that is once again a good sign. Trade setup number 4. Prior to candle 2, there must be at least 1 candle which doesn't touch the EMA. There are a lot of candles there, so we are good to go there. And Trade setup number 5. Candle 3 must not close on the opposite side of the 35 EMA. We can see from this massive wick, it's dropped right down and people have pushed the price right back up. So it has not closed on the wrong side. We have a valid trade setup. So once again, I can get my trade tool going along. I can click at the close price here and move it along one. So let's log that. January the 9th at 6 p.m. Same currency. January 9th at 6 p.m. Perfect. Entry confirmation. Confirming that we're going to 2 counter trend 1 trend candles and candles 2 and or 3 have touched or crossed the EMA. That's all looking good to me. So enter trade at the close price of the 3rd candle at the open of the new candle. That's where our trade is sitting right now. Set stop loss 1 ATR below the swing low of the 2nd or the 3rd candle. So the swing low is the 3rd candle, and when we hover over that, we see we have an ATR of 208 this time. So that would be 442, and we know we're starting at 1 to 1. So now I can put in 44.2 in here in the stop loss, and let's move the trades forward. Let's continue looking. Oh, that was a very successful trade. It won within a couple of hours. Sorry, a couple of candles, I should say. And here we have another cross. Now we're getting familiar with it. We don't need to look at our strategy outline all the time. So we know this is not a valid setup because of point 2. Our candlestick pattern is not correct. Okay, so moving on. Here we have another one. We have a cross of the 35 on the 2nd candle. We have 2 and 1, so that's good. Let's put in our trade open there. That's January 17th, 01/17/18 at 10 p.m. So I know I'm dragging to the swing low here, and I'm adding 1 ATR of 306. So 1, 2, 3, 4, 5, 6, and then adding 300 comes 793. And we can once again push play on this market to see what happens. Oh, before that, I should enter that 79.3, 79.3. And we can keep moving along. Okay, we have another setup. So I'll move across 1 candle. Oh, that's looking good already. Put the open in there. January 21st at 10 p.m. January 21st, 18 at 10 p.m. And our stop loss will be swing low of the 2nd candle, ATR of the 3rd, 263. Let's go. That's 3, that's 6, and that's 2, 386. So it's a pretty healthy looking trade to begin with. And it hits profits pretty quickly on 1 to 1. So we'll continue on and we'll log where these trades actually get to. Since I'm just entering a whole lot of trades right now, I want to show you some that are actually closing so we can enter our max win and start tying a few of these trades up. I'll fast forward this bit and come back to you when I'm starting to log maximum wins on these.